China's economy is Well, everyone has euphoria as stock markets in the United States are starting to boom, showing investors have FOMO and euphoria and are FOMOing into things such as Chinese stocks. Save this video because 1, TikTok is probably going to remove it. 2, so you understand that we are nowhere near a bull run again. That video I just showed you was security forces in China actually attacking protesters that were seeking frozen funds. Remember the Evergrande bubble everybody was talking about last August?
There could be global economic fallout after one of China's largest real estate developers defaulted on its debts.
Not only did they default on their debts and come out with a bunch of different plans to try to repair their business, they continue to fail to meet their deadlines, and they are never going to make them. Over 225 million of square footage in China is going under. This is the Lehman Brothers and real estate bubble the United States went through in 2008, but way worse. Over 70% of China's assets are tied up in real estate. And the US exports hundreds of billions of dollars worth of commodities and material and resources from China every single year. Now, while the US has a very diverse portfolio, this on top of all the inflation that the entire world is going through right now is going to bring volatility into the markets. Just by looking at the bond market, we can see that investors are already pricing in further downside action. While you have maniacs like Jim Cramer running around saying now's the time to buy tech stocks, you are late to the game as the Nasdaq is already up 23%. The average rally in the last 26 bear markets is 23%, with 2 times surpassing 40% and only once a 50% rally. So bringing on a risk-on portfolio right now is a lot higher risk than it was in June and July. And if you're an investor that is chasing someone's wet dream that the feds are going to focus on quantitative easing, household debt's at an all-time high. Government debt is at an all-time high. Corporation and businesses debt at an all-time high. Inflation at an all-time high. And your labor productivity is on a decline. For you guys that don't understand what the output per hour is, this relates to how much debt everybody has and how much they make per month. And since inflation is continuing to rise, your purchasing power from whatever you make per month is not keeping up at the same rate. Which means if you're making $5,000 a month and inflation continues to rally, the debt that everybody owes is only going to become more expensive to pay because your purchasing power is decreasing. Now, there's no need to freak out. On my channel, we predicted the relief rally and knew consumers were going to have euphoria. So if you want to stay ahead of the game and be profitable in this volatile market, be sure to give me a like, comment, and follow, and I'll see you in the next video.